Hey guys, be sure to subscribe to my channel. So critical to Ripple's defense against allegations it sold unregistered securities is establishing equivalency between Bitcoin, Ethereum, and XRP. Under former Director Hinman, the SEC determined in 2018 that both Bitcoin and Ethereum were not securities. In both instances, Hinman drew attention to the decentralization of both networks as a factor in making that determination. By seeking discovery of documentation on the matter, Ripple hopes to determine why XRP is being singled out in this regard. Commenting on Judge Netburn's ruling, Attorney Hogan said it was a nuanced decision. The judge agreed to the discovery of communications between the SEC and third parties, but not internal documents. In a separate motion, the SEC is seeking to prevent XRP holders from intervening in the case. The motion to intervene, led by John Deaton, puts forth the argument that XRP holders lost out due to the SEC filing of legal action to Ripple. The SEC filed its opposition to the motion to intervene yesterday. They put forward the argument that the motion to intervene is statute barred, also adding that intervention will bring nothing new to the case. Supreme Court precedent dictates that this type of interference with government enforcement actions is constitutionally and statutorily barred, as it intrudes on executive branch prosecutorial discretion. The filing read, while Ripple has scored many mini-victories during the hearing stage of the lawsuit, the latest happenings show that the SEC has no intention of rolling over. Cryptocurrency experts are closely watching a legal battle between Ripple Labs Inc. and the Securities and Exchange Commission, anticipating the case could establish precedent and clarify the regulatory landscape for digital coin offerings. The SEC last year sued the company, CEO Brad Garlinghouse and Executive Chairman Chris Larson, in the U.S. District Court for the Southern District of New York, alleging they should have registered XRP under securities law. Ripple and its executives have asked the court to dismiss the case. Ripple scored wins in preliminary rulings in the federal court, including gaining access to internal SEC documents and shielding its executives' personal bank records from discovery. Holders of Ripple's XRP cryptocurrency at issue in the litigation were also granted permission in April to intervene in the case. Those wins don't necessarily foreshadow a victory for Ripple, but the case is on track to establish legal precedent for the SEC authority over digital coin offerings, according to Drew Hinks, a lawyer at Carlton Fields PA in Miami who works on cryptocurrency matters. This is a significant case, Hinks said in an interview with CQ Roll Call. Ripple has tremendous financial resources, has assembled an incredible team of well-respected lawyers, and has one of the most high-profile projects in the industry. San Francisco-based Ripple was founded in 2012 and offers a real-time payment settlement network based on blockchain technology. Since its formation, the fintech has raised $1.38 billion from the sale of more than 14 billion units of its digital coin called XRP, according to court documents. XRP is the world's fourth largest cryptocurrency today, with a $70 billion market value. The SEC says XRP meets the definition of a security because it's an investment contract, the test articulated in 1946 by the Supreme Court in a case called SEC v. Howey. Section 5 of the Securities Act is all-embracing, the agency wrote in the complaint. The SEC wants to focus the dispute narrowly on whether XRP meets that long-standing definition, according to Thomas Gorman, a securities lawyer at Dorsey and former senior counsel in the agency's enforcement division. If money is pooled and the investors are expecting to share profits, it's probably a security subject to registration. Ripple says XRP isn't an investment contract but a medium of exchange, like cash or other cryptocurrencies. It cited a settlement in 2015 with the Justice Department and the Treasury Department's Financial Crimes Enforcement Network that required the company to register as a money services business. The cryptocurrencies Bitcoin and Ether were determined by the SEC to be commodities, not securities in recent years, and the SEC doesn't have jurisdiction over them. Ripple wants to know more about that decision and was granted access in the court case to internal documents on how the agency concluded that XRP should be treated differently. Ripple and the executives say the SEC failed to demonstrate that the company should have known XRP was subject to registration, and because the agency remained silent for years while a massive global trading market built up around XRP, according to court filings. The SEC has been increasingly broad in recent years as to what constitutes intent to pool an investment, so greater clarity on that issue would be beneficial, Gorman said. As for Ripple's preliminary discovery wins, Gorman said the judge may be granting Ripple broad access because the case is likely to be scrutinized on appeal. Experts don't anticipate any surprises when the SEC turns over internal memos, but industry insiders would be interested to take a peek behind the regulator's veil. To my knowledge, these documents have not been publicly disclosed before, Inc. said. Though it's unclear whether they'll be made public here, I imagine many in our industry would find those interesting. The SEC filed suit against Ripple on December, the day before former resignation, and some notice the timing. Some think new SEC Gary Gensler, who has an interest in digital assets, is poised to launch a broader effort to clarify the regulatory landscape for cryptocurrencies.
And whether they're at odds with what we're hearing from the Fed right now.
Right. I mean, I think, when from an economic perspective, we're still looking for core inflation to be in that 2%-ish range on average this year. And when you look at, CPI or other measures in the next few quarters, certainly we're going to be above that. But from a company perspective, for equities, when we look at net margins this earnings season, companies are actually so far been able to handle these costs and price through. We're seeing margins actually rising. So this is something that companies that have pricing power, we think are better positioned in this backdrop. Companies that are much more labor intensive, if we do start to see wages rise, are worse positioned. And then, I think a lot of, smaller companies, while they can be more labor intensive, this could finally be a backdrop that if we're shifting from, large companies taking share, low growth, low wages, to a backdrop where there's a focus of the administration on small businesses and these companies could be well positioned.
Yeah, no, that makes sense. So, Bob, let's sort of put a point in it. What is your advice to investors here? What should people do if they believe what you're saying, that Janet Yellen is just saying the obvious?
Well, I think you're supposed to hide in the front end of the yield curve. So short in duration, you're supposed to like credit because credit spreads can still come in, particularly in the high yield space. Yeah, we'd like to all buy at a higher yield, but we can't. There's a recovery that's accelerating, and that's good for credit spreads. And the emerging markets should eventually draft off of the recovery in the developed market.
Yeah, Kelly, lots of great points. On your last point, there's going to be nowhere to hide if you've got Bitcoin and it's sitting in your bank account and you get your 1099 at the end of the year or in February or January, and it's going to show you that you've appreciated 200%, in the couple of bucks that you had in Bitcoin. So I do think, that's going to be something it's bringing Bitcoin into the light and into the regulatory framework, and that's probably a good thing. The other point I would make is, you talk about Cash App, you talk about, Square and PayPal, Robinhoods of the world, they've been providing access to Bitcoin for a while now. I do think this widens the pool of people who can, who are willing and comfortable to get this, because, there are people who aren't comfortable with signing up with the Coinbases of the world.